Good afternoon. Welcome to another edition, Market Hunter Thursday with Herve. So excited for you guys to be with us. Thank you for joining me every week, especially today. Real excited. We move the show to a different city every week. We invite a guest speaker from a different city to talk about real estate investing in their city. We're very happy today to take the show to Milwaukee, Wisconsin, Midwest part of the country. So let me break it down with a few stats. Milwaukee, population of 590,000, largest city in Wisconsin. Median income just over $40,000. Median rent $860. You got a median home value of $120,000. So it can make it really attractive for renters out there. Milwaukee's big, folks. Not only home of the Milwaukee Bucks and the Greek Freak, but also a headquarter of Kohl's, Fiserv, Rockwell Automation, and Johnson Control. We're real excited today to have with us Mr. Brock Mogensen of Smart Asset Capital. Hey, Brock. Thanks for joining us today, man. Welcome to Market Hunter Thursday with Herve.
Thanks for having me on.
So, Brock, one thing, you probably heard me kind of spew out some of the stats on Milwaukee, which is something that we do on all the, with all the guest speakers that we have on our show. Population of 590,000, although one of the largest cities in the state of Wisconsin, but a city that has seen some recent population decline, at least a couple of years ago. If you're kind of, up to date on that, what do you attribute that to, and what do you see kind of taking place over the next year or two?
Yeah, so I think you're totally right. Where it's pretty flat. I mean, overall, if you look back, migration has been pretty flat, slightly negative some years, slightly positive other years, and it's at the end of the day, I mean, it's really following the mass migration trends, right? I mean, everyone's going to south and certain markets out west, and it follows that same path. That being said, there is, and that's kind of why if you look at the city of Milwaukee, but then there's also a lot of tertiary markets that I personally prefer, where you can find some population growth actually. More recently, if you look at data, most of it's going to be a couple of years behind us, but there's a lot of migration happening from Illinois to Wisconsin right now. A lot of people are fleeing Illinois, for several reasons, but they're coming to Wisconsin, and there's markets right on the border of Wisconsin, Kenosha, Pleasant Prairie area, that are seeing a whole bunch of growth because people can live there and still work in Illinois. Take advantage of buying less taxes, cheaper homes here in Wisconsin. So stuff like that, where it's more of a micro look into the migration trends. But I mean, overall, it's not the high growth like a lot of these other markets in the country, especially down south and out west, where you can see a lot more growth. Milwaukee definitely doesn't have that.
Right. Got you. And you mentioned less taxes and cheaper homes. I love those words, less and cheaper. But is that the main reason why folks have been, I did not know about that, folks leaving Illinois, moving into Wisconsin? Is those kind of the primary reasons of that shift?
That and jobs. There's a lot of big companies that are moving their warehouses right across the border. A lot of, if you look across and it's getting pretty micro here, but the Pleasant Prairie corridor, which is the first city pretty much right when you cross over from Illinois to Wisconsin, there's just warehouses popping up everywhere. A lot of them have come from Illinois. They could still draw from the same work pool because it's only 20 minutes, north, but the advantages are there, and Wisconsin's offering these advantages for them to move over there. So, I mean, obviously, there's people from Illinois that are going all over the place, all over the country,
right?
Down south a lot. Right. But Wisconsin is capturing a certain segment of those people that still want to live in the Midwest, but want to take advantage of, kind of get out of some of the laws that are there in Illinois.
If you could talk to us a little bit about two things. Number one, what you do at Smart Asset Capital. And then really number two, what type of real estate strategy are people finding most attractive in Milwaukee when you talk about single family rentals and flips, multifamily, whether it's duplexes, triplexes, house hunting, or, larger multifamily? What are folks in Milwaukee kind of gravitating to based off of some of the shifts that we were talking about and some of the attractive things going on in Milwaukee?
First part of your question, essentially what we do is private equity syndication. So we're targeting large deals, kind of multiple asset classes, industrial, apartments, we're doing some self-storage, stuff like that. And we essentially just pool capital together to buy these deals. I'm on the managing partner side for that. I mean, there's just like most markets. I mean, there's people doing a whole bunch of different things. I mean, primarily, I think a lot of people are attracted to Milwaukee, and I see it all the time talking to people in other states. They're attracted to Milwaukee because of the cash flow. And it's a, if your investment strategy is to target, high appreciation, lower cash flow, I mean, there's definitely that's a lot of people's play. You're going to look to more of the high growth markets, but Milwaukee primarily is going to be, that high cash flow. The appreciation is going to be there, but you're not going to see, right, because all these migration trends and everything else that influences appreciation. A lot of it, Milwaukee is a top contender in. So a lot of people are attracted to this market because they want the cash flow and they're able to make sense of 8 to 10% cash on cash returns. You can get them here compared to some of the other markets. You might not be able to achieve those. So I think that's what really attracts people that from other states, out of state investing here. As far as like size, I mean, there's big apartment complexes here. I mean, you might not see as many as some other bigger cities. That's kind of, we're targeting larger deals. I mean, like any other market, there's a lot of people targeting every deal. There's also a lot of opportunity in some of the smaller plexes. And that's where you see a lot of these out of state investors are coming in and buying these 2 to 4 unit properties and achieving good cash flow returns.
When you look at the investor base in Milwaukee right now, with a lot of tech activity that's been taking place in real estate, specifically commercial real estate, a lot of folks coming to the Midwest, like you're saying. I mean, we're seeing it over here in the Northeast. Maybe not from a migration standpoint. Migration from the Northeast is really going down south, Southeast. Maybe not so much Midwest, but you definitely see investing dollars leaving the Northeast, going to the Midwest because, like you said, very attractive cash on cash, cash on cash returns. Is that a lot of the outside investing dollars that you see coming in, going into the big cash flow plays that is taking place in Milwaukee? And if so, how are existing investors in Milwaukee dealing with that, if at all, from a competitive standpoint?
It's most of the big players that are buying deals in Milwaukee are, Wisconsin based investors. You do see capital kind of coming from some other places. A lot of, I think, most of the capital that's coming here is more specific on the industrial sector. Obviously, the Rust Belt area is a strong industrial. So I think that's one asset class where we're starting to see more out of state investors come in on a larger scale, right? As far as like the people that are really running these big deals, most of them, I was just looking at a list the other day of, the top apartment buyers last year. And almost everyone I recognized are Wisconsin based people. So I think that's kind of the trend we see here is it's not like some of these other markets where it's attracting people from all other states and even countries.
Right.
I'd say the bulk of the big deals getting done here are still going to be people that, born and raised in Wisconsin.
Got it. So, when you see that, how are folks approaching their real estate opportunities, their real estate strategies? Do you see a lot of folks kind of going at it alone? Do you see a lot of folks kind of teaming up, grouping up with people, and things like that? As you hear one of the most important things, not only at what price that you're buying that real estate, but how you're managing it. So, as a, so on top of that, how is the selection of property managers in Milwaukee, considering, folks may not really have the wherewithal and really just the knowledge on how to go ahead and manage a property on their own, especially if you're talking on something 10 units or higher?
Yep. Yeah. So I think you're seeing more and more people, and it's actually something I always recommend is the partnership model. That's the model I've chosen, and I've found it to be great to partner with other people and kind of scale up that way. But as far as property management, I mean, yeah, there's a handful of property management companies here that run most of the, manage most of the deals, and they attract a lot of people from other states that are looking to get here, and they'll manage their 4 unit property for them, or even bigger. But yeah, I mean, there's definitely an abundance of property management companies here. No shortage of that for people that are looking to kind of get in from other states.
Right.
Obviously, you have to do your due diligence on it, but there are companies out here doing that for sure.
A lot of those property managers, have you found them to also be owner operators, or pretty much third party property managers?
Most of them that I know of are owner operators. So, for example, actually, my business partner that manages all of our stuff owns a property management company. They manage about 2,000 units in the Wisconsin area. They're getting up at the top of the list of one of the biggest ones in the state, and it was started based off the owner operator philosophy that they now do third party management as well. But the couple of big ones that I know of are owner operators. I think there's one or two that are just all management and brokerage. But for me, that's kind of how a lot of the best property management companies start, is the owner operator philosophy.
So now that's a segue to, since we're preaching cash on cash in Milwaukee, what type of assets, either are in plentiful over there, or do you see more and more folks gravitating to when you talk about type C assets, those that need a lot of work? Maybe you're buying a C type asset in a nice area, but you're going to go ahead and come in, reposition it to a C plus B type asset, lower the expenses, bring up the rents with some of those local property managers that you're talking about? Or is it a combination, or are you seeing some more B and A type assets? And if so, is there, a shortage of multifamily in Milwaukee right now that could be trying to spur some activity, some development taking place, which usually is an A type asset, just to go ahead and justify the cost? Everyone out there is screaming about higher lumber prices that have been besieging the country over the past few months.
Yeah. Primarily, the play here is this, if I were to choose one of those two, the C to B, based off of, especially in the city of Milwaukee, also because most of the inventory here in the area is older. 60s to 70s build is kind of the main thing you're going to see. Obviously there's new construction going on quite a bit in multiple parts of the state, which hopefully is going to kind of that proves the demand is there. Yeah, I'd say primarily between the two, the more common scenario is people are targeting those C class assets, and place that might be a path of progress. Specifically for me, some of those tertiary markets surrounding Milwaukee are where I see the path of progress for, several markets there where, yeah, you can target, in a B area, but it's, a C class asset, fix it up, turn into, a B class asset. So that's kind of the play I've seen most people. Obviously, the more people, a lot of people know about that strategy, and it makes it a lot more competitive to find a deal.
Yep.
But if I were to say that's like the bulk of the people are kind of, that's where this market kind of falls into.
So with that case, you say secondary and tertiary markets. We're a big fan here at Derosa Group of secondary and tertiary markets. Go to areas where it's a little bit less competitive, but folks are making definitely much more noise about it. Like you said, the tertiary markets surrounding Milwaukee, do they benefit from the economy of Milwaukee, or are they beginning to establish some economies of themselves? And then secondly, when you talk about some of the build that's taking place in the state right now, is a lot of that build really A type properties going on?
I think when you look at tertiary markets surrounding Milwaukee, primarily it's driven from jobs in the city, and people are just wanting to live right outside the city. It's easy to access in the city. It's it's still, Milwaukee's kind of right in between where you get the city life. It's big enough to have a downtown and a lot of things to do, but not quite big enough to draw in crazy traffic like Chicago or some of these other bigger cities. So I think you get a lot of people that can live right on the edge, and they can take a 10 to 15-minute Uber downtown if they want to, go enjoy the nightlife or go out downtown, but then also, have that suburb type life. So I think that and a lot of them commute right downtown to work. So I think that's kind of what's really driving the growth on some of those outside markets there. As far as stuff that's going up built, most of the stuff I'm seeing is right in that, maybe A minus some stuff, but it's the nicer stuff going up in kind of the path of progress areas. For most of what I've seen, there I do see some workforce housing going up in some of these areas, but primarily what I'm seeing is more builds going on in these A class areas.
We don't know some of those neighborhoods, some of those secondary, tertiary markets that you're talking to. So for new investors, either for those folks based in Milwaukee or in your state, or for folks from the outside, what are some of those secondary, tertiary towns would you recommend for them?
West Allis is a good one. Wauwatosa, you got Waukesha, Cudahy, Glendale, Butler. Some of those get pretty small, and some are pretty big, like Waukesha. So those are all within 20 to 30 minutes of the city, and all are seeing good growth and are still close enough to the city to draw upon someone that works in the city. So like I was saying before, I think that's one of the benefits that a lot of people find about those towns. So that's primarily where the type of markets that I'm focusing on. We're still looking at stuff in the city, but I'm really more of a fan of those markets than 20, 30 minutes of downtown.
If we're going to shift to financing a little bit, if cap rates have been compressing, when you're structuring your deals together, and I guess mainly for multifamily, what kind of IRR, are you seeing on deals that you're putting together?
Glad you brought that up. And that's like probably the most important metric I like to really look at.
Okay.
And for me, and what I've found for attracting investors is 15% is kind of that threshold where you have to hit that number to really, perk people's ears up.
Sure.
So, obviously anything above that's great. I mean, I'd say on average, we're usually the deals we're doing are somewhere around, 17 to 18% on average IRR.
Right. Right.
But 15% for me is kind of like, I got to hit that number to really attract, capital.
Got it. What's kind of the investment time horizon you're asking your investors to be on the deal? Do you have a exit at 5, 7, 10 years? Or
It definitely depends on the deal. We've gotten pretty creative on partnerships and structures like that. Some we do, refi at year 5, sell at year 10. On average, I mean, usually our hold periods are, I like to think 7 to 8 years is kind of our ballpark. Obviously, you could sell sooner, you could sell later. I'm usually more conservative and assume a longer hold. I'd rather tell an investor, hey, expect to hold it for 10 years, but if we sell it sooner, that's just a bonus. I think a lot of people are kind of, attracting investors by saying, I'm going to double your money in 3 years. And that
right.
sounds great on paper.
Yeah.
But for me, it's like, what if it doesn't work out in 3 years? Who knows where the economy is 3 years from now? Like I want them prepared for the long term, and it's just a bonus if we can sell earlier.
Got it. So that 15% is the majority of that IRR return taking place at sale for you guys?
A good portion of it, yeah. Because I mean, we're targeting value add deals, so obviously that's a huge driver in the IRR. Cash flow. I usually like to walk in year 1, 8 to 10% cash flow, kind of like I was saying, to buy with. Obviously there's deals where you could buy a lower cash flow, knowing you're going to increase it. But I'm a big proponent for buying deals that are already cash flow. That's just kind of our philosophy when we're buying deals. So I like to walk in with that, but then also be able to walk in with unrealized potential.
Right.
To boost that up, and then to capture a good portion of the IRR on the exit.
Cool. How are you structuring your deals? What kind of combination of debt equity are you using for your deals? And your deals, are they syndicated offerings with or without accredited investors on those deals?
Yeah, so generally with that we're doing 75% LTV, pretty common.
Yeah.
We've done an 80% LTV, looked at 70% on a few. I mean, it seems like 75% right now is kind of our go-to on most of our deals. Pretty basic financing structures. We've done agency debt. We've done most recently. We've been doing just local banks, just because agency debt has crazy requirements right now, and it's hard to make sense of the numbers after you factor all that in. So as far as partnership structures, we accept unaccredited and accredited. So most of the deals we're doing are people we've built relationships with over the past year or two.
Cool. We're coming towards the end. One of the things that we always, tell our guest speakers that come on is, how can we help you out at what you're doing at Smart Asset Capital to help you achieve the kind of goals that you've put in place for this year?
Really, just one of my goals is really to just kind of engage with more people, talk to more people, just talk to more people in real estate. I mean, I've found that the more people I can talk to, the more I can help other people, and it always comes back in one way or another. Right. So for me, I mean, I spent quite a bit of time, specifically over quarantine, actually kind of building out some more educational content. I built out my own deal analyzer, stuff like that I threw up on my website for people to hop on there and download. So that's a great way to connect, and then that way, if people want to connect further and get on conversations, I'm always willing to do that. www.smartassetcapital.com.
That's easy.
That'll pop right up. Yep.
Cool.
And then just education tab, and then you'll see a list of stuff I've just put out there.
It's not going to stand out like, the sexy Dallases and Charlottes and Tampas and Phoenixes of the world. It's sleepy Milwaukee, but guess what? We like sleepy. We like sleepy, man. There's a lot of good opportunities to sleepy. People that it's you can make great living flying below the radar. And that's how I kind of view Milwaukee, right? Flying below the radar. But if you pick your spots, some of those neighborhoods that Brock just spoke about, secondary and tertiary markets around Milwaukee, seems like that's where the most of your opportunities are. So, Brock, listen, man, can't thank you enough. Really, really appreciate it. Very, very insightful, very knowledgeable. I wish you guys a health and profitable week. Market Hunter out.